This is Cindy Presgraves. I'm with Cindy's Realty Group by Virtual Properties. I'm the team leader. And I am wanting to introduce here Bennett with Element Funding.
Good afternoon, everybody.
Hi. So, hey, I know there's been a lot of people applying for loans lately, but they're not disclosing their like extra income revenues. Like I know one of them, I've been working with a lot of clients or, they're wanting to get pre-qualified, but they kind of don't know about child support neither. So
Right.
I have this,
Yeah.
this mom's like, that we had a situation and like, hey, do you have child support? She's like, that's an income? I'm like, yeah, that is an income. So can you tell me what type of income revenues, let's say for instance, how does child support work as an income revenue when you're actually applying for a loan?
Absolutely. Absolutely. And it's a great question because, not a lot of people, like you said, are privy to this information. And, a couple $100 can really make the difference in a deal, especially when we're talking about marginal loans with high debt to income ratios. So child support is definitely a sourceable income because everything's been documented through the courts. Additionally, what's great about it is in the mortgage world, all we have to do is prove a continuance of 3 years of income. Okay, so if you or your spouse is paying child support, you're going on a loan together, it's going to be counted against you, just like if you're receiving child support, it's going to be counted for you in your income. Okay, so as I said, that 3-year continuance is the biggest thing that we have to prove in our mortgage world. So when we're talking about, a child that might be 17 years old that you're paying or receiving child support on, that might not be necessarily income that we can count because that child support may end next year, right? Now, if you have a 9-year-old or a 12-year-old where we know that income is going to continue for at least 3 years, that's definitely money that we need to count in that deal because not only will it make your debt to income ratio better, maybe put you in a better qualification bracket, but ultimately what it could do is get you a lower rate, okay? Because we all know that rates are very unique to each borrower. It's just like a fingerprint. Everything's taken into consideration from credit score to debt to income to payment history. So it's really important to do all this nitty gritty stuff up front and understand, the route that we're going to take.
And okay, so besides child support and all that, would it help to have? I know, like in my case, I have the divorce decree. The state, up to what age will the kids get? I will receive that child support for the kids. Would that help if they're 18 and it states on the divorce decree, hey, until age 21 or age 26?
Yeah, so that's a great question. It will help if it states into a specific era, a specific age that the child support will be good through. Again, that's all documents that has to be documented in our file before we issue that clear to close. Another good point is alimony. Okay, so a lot of people are paying child support and alimony, right? That child support may be up, but that alimony could continue for the next, 8 to 10 years. We don't know until we see the final judgment and decree, which, is public record. So if you don't have that in front of you or you can't find it in your documents after, a separation that happened 10 years ago, that's all public record that, my team and I, we research for you. We get all that document in order, so we can count as much income in this deal up front, to ensure a smooth closing and, a happy borrower.
So I have another question for you. So, all right. So now we're talking to alimony. That was my next question. In regards to alimony, if I don't work and I'm receiving $12,000 in alimony, can I actually apply for a mortgage?
I'm sorry, say that again.
If I only receive alimony and I'm receiving, for an example, I have a client that she received $12,000 a month in alimony.
Right.
And that's until if she remarries. If she remarries, then you know what, that alimony cancels. So she's like, hey, you know what? And I've had other clients that they receive alimony until they pass away.
Right. Yeah. So a lot of times it is set up like with both of those scenarios. So in a lot of divorce decrees, you'll see this verbiage that says, to pay the spouse until remarried or until, the passing of that spouse. So, it just depends on the verbiage. Of course, if it says until, the spouse turns, 62 and can start collecting Social Security, and, the borrower's spouse is actually, 60 right now, then that wouldn't be a 3-year continuance, right? So again, it just all circles back to that 3-year continuance. And that's the same with, self-employment income. When we're getting creative and trying to, use 401k income, for borrowers that are eligible to start withdrawing from their 401k. So, it all just depends on the verbiage that's in that decree. And we really need to make sure we get ahead of that up front so we're not surprised by anything, a week or two before the closing.
Okay, so now talk to me about the 401k, because I have no idea what you're talking about now.
Okay, so
let me make this clear. I do know what a 401k is, but what are you talking about 401k income? Because I know there's a certain amount of time. Let's say,
right.
if you go ahead and retire, let me make this clear that I do know what a 401k is and how does it work, but how does it work in the mortgage world when applying for a house? Gosh.
Yeah, so you're technically not eligible to, the funds in your 401k until you reach 59 and a half. Okay, so when you reach 59 and a half, and let's say, especially in this time, a lot of people are getting furloughed. A lot of people are, losing their jobs from, the pandemic that we have going on. This 401k can actually be used as income. And it's a pretty creative way to get your debt to income ratio lower and, show that you're receiving a lot of income. What happens is, let's take, for example, a borrower has $300,000 in their 401k. Okay. Well, then what they could do, if they're of age, they can reach out to their 401k company and say, listen, I'd like to start taking draws on my 401k. So if I want to receive extra $3,000 a month, my 401k company can do that for me. And if you're receiving $3,000 a month on $300,000, that's definitely a continuance of income for the next 3 years. That's simple math that just works out perfectly. So, even if you're losing your job, even if, you're furloughed and you don't know if you're ever going to go back, or if you even want to go back, then that 401k income is a super creative and streamlined way to, document additional income. And ultimately, lower the debt to income, get you a better rate, So it's definitely very beneficial to talk through all your options with your loan officer before we actually trigger that application. That's why I feel you and I work so well together, because when, we have borrowers that are 2-3 months out from being ready to buy, you send them my way. That way I can start formulating a game plan. I say, look, this is plan A. We want to do A, B, and C for plan A. If that doesn't work, we're plan B and do A, B, and C for plan B. So, we all know that in this business, it's controlled chaos the majority of the time, right? So what you
we try to control the chaos.
Exactly. So ultimately what you got to do is, have fallback plans. And the way that you do that is getting a hold of borrowers, early, 6 months, 8 months, even a year before they're ready to buy. That way, when it's time to go to the closing table and give hugs and pass out closing gifts, we're not surprised by anything. You know what I'm saying?
Okay, so now we already talked about child support. We already talked about alimony, 401k. What about, is there any other sources of additional income that you can think of?
Yeah, definitely. So, when we're talking about, you deal with a lot of investors. Okay. So, you're a great example of this. When we're dealing with a lot of investors, a lot of times what they're doing is they're buying investment properties, and, renting them out so they can collect rental income. Rental income, very similar to self-employment income, has to be reported on your taxes. Okay. So what we're doing when we're talking about, looking at the properties that each borrower owns, what they're renting them out for, what the actual payment is on the property, all we need is a 2-year history to count that rental income for our borrowers. So if you have a borrower that, has 2 properties, she's renting them out, and she's making about, $1,700 a month on each property, then, that's $2,400 that we can count an additional income at the, for the closing. So we're essentially setting the borrower up like we were for the child support. We need to count everything. We need to go through all of our steps and make sure that we do our clerical work up front and really calculate all that income. So definitely rental income is big. You have your child support, your alimony. And like I said, every loan is unique. It's just like a fingerprint. So if you're not sure, you can always reach out to Cindy or I, and we'll have to formulate a game plan. We don't charge to, just get in contact with you or formulate game plans. We operate strictly on, reputation. And our reputation so far has been, we take borrowers that are down here and we bring them up here for financial success. And ultimately that's what gets us referrals. Okay. Because you and I both know that we don't spend, tens of thousands of dollars a month on marketing. Right. So what we're doing is, relaying it word of mouth. We rely on that. And I think the game plans that you and I really set forth are what pique borrowers' interests.
Perfect. Okay. So then now we got the rental, the child support, 401k, alimony. What else can you think of, or do you think that would be? What about self-employment? I know self-employment is 2 years.
Yep. So we got to do a 2-year look back. In special cases, we can do a 1-year look back on tax returns. These are for borrowers that have owned their company, 100% owner for a long time. So, for instance, I have a borrower right now that has owned his business for 10 years, and we only have to do a 1-year look back on his tax returns because when we order tax transcripts, we order them for the past 2 to 3 years, and we can look and see that he's been in good standing with the IRS. He doesn't owe any outstanding tax liability, anything like that. So it is a 2-year look back, very similar to 1099 income. It's a 2-year look back. The biggest thing is making sure that you're filing your taxes and that you're paying any outstanding liability that you might owe to the IRS, because that's really the things that we see that stop deals up front is people having back taxes owed, but they're on a payment plan. So then we have to count that as a liability against them.
Oh, and that's a debt too. That's right.
So we really got to look out for this stuff up front so it doesn't happen, on the 20th day of the contract, and then, we lose our earnest money.
No, definitely. All right. So is there anything else that you can think of before we leave?
Not really, but I would just like to, one, give a shout out to you because, and your team, especially, want to give a shout out to Shelly because you guys are so welcoming. And not only that, but definitely top-notch agents is who you're dealing with when you're going to the Presgraves team, is the Cindy Realty team, because what we're looking at is agents that have been in the business that are learning, every day, because you and I both know guidelines change every day. The market changes every day. It's a 24-hour struggle to keep up with this stuff. And you guys do a great job. And I feel that's why, your team and my team have connected so far, is because we're just, we're always striving to be better than just the average Quicken Loans or the,
Please don't say Quicken Loans right now.
I mean, it's so competitive out there. You have to do something to, make your name stick and really pop out. So
no, it's like I know a few months ago. Well, actually, we helped Shelly. For instance, Shelly and this buyer. I don't want to mention the buyer's name, by the way, because I want to keep anonymity. But it's like, hey, you know what? We went through 3 different lenders. And seriously, we went from A to probably JKL plan. And I worked really hard on this.
Right.
Because I was like, okay, so this client, she had $125,000 to put down. And then she had a credit score of how much? I can't remember. It was in the 580s, 585, under the 600s. Right. But hey, we contacted Mac and we made it work. Because that's another thing. we didn't know what, like, I tried to look for alternatives.
Right.
I researched, I basically contacted everybody down the road. And then we came to Mac, and believe me, he saved the deal. They were frustrated. They wanted to get into a house. Hey, I understand that right now it's really hard to get into having a 600 credit score and lower. It's really hard to find a lender that would actually get you approved, and not then, there's other things in place. But you know what?
Right.
I'm really, really happy that um, Shelly and we helped her, and they're closing next month, right? Is it
Next week?
Oh, next week? Oh, okay, next week. All right, my
Clear to
days
close
are
already.
Oh, woohoo! So that's.
But you bring up a great point. Is there's not a lot of lenders out there that are going under 600 or 620. My company personally offers loans down to a 500 credit score. And that's hard to find out there. A 500 credit score. Most people are thinking non QM loans or something like that. But when we can go all the way down to a 500 credit score, there are some special stipulations, like having to put 10% down, having to have 3 to 6 months of reserves, and some compensating factors. It's super important to snag those deals, because those are ultimately the people that are going to refer Cindy and I out. It's the people that see that we're willing to work with you, and you're not just a number to us. You're not just a paycheck to us. We genuinely care about what we do. And I'll do one little shameless plug for my dad here, because he always says, when we're hiring people in the mortgage business, I can teach anybody how to do the mortgage business. What I can't teach people to do is care. And that's ultimately what it takes to be a successful lender, to be a successful realtor, and to be a good friend to people. You have to genuinely care about what you're doing every day to, really make an impact on people's lives.
It's not about the business. It's about the building the relationship. Because
Absolutely.
you know what, you get so intimate with people. And believe me, I mean, for me, I love real estate, but I don't do it because of the money. I do it because, hey, you know what? For me, it's very, very important. It's like,
Right.
for instance, Shelly's client, we started working with it together. I found, it was for me really important. All right, let's see. Let me look. And I understand sometimes we're like, okay, should I give up? I'm like, no, we're not going to give up. We can find a solution.
Yeah.
Let me see what there's out there. So that's really important for us to just find an alternatives. And hey, you know what? There's going to be some times that you might have to wait 3 to 6 months. I mean, down the road. But you know what? It's about that. We're going to be there. We're going to follow up with you, and we're going to make sure that your goal is mainly being into a house, getting into a house, being a homeowner. And that's where we come in.
Yeah, and that's what sets you up for financial success, right? It's one of the best investments you can make. And, I say this about you to our clients all the time. You are one of the most top-notch realtors I've ever met. I've seen people ask for a closing cost and get shot down real quick. Well, the miracles that you are beyond me. I don't know how you do it, but I love that you do it, because it makes my job easier. And it's even better that we have such a good relationship that, we can work through deals at, 9, 10 o'clock at night to really show these buyers that we care about them. Right. So
that is true. But all right. So I am going to put Mac Bennett's information at the end of this video. Mac, do you want to say your phone number?
Yeah, absolutely. If you need to reach out to me, my email address is mbennett@elementfunding.com. And my direct cell number is 770-743-9629. I work nights, I work weekends, and I would be happy to help you out with your purchase.
And feel free to text him. You can call him. If you don't feel comfortable texting him at 11 o'clock, he understands, hey, is this Mac? All right, I need help with a loan. He will be there. Me as well. I'm the same way. You know what? If I don't answer, it's because I'm sleeping. I wake up at 4 o'clock in the morning, and I start my day from there. And
That's
sometimes
right.
I don't go to sleep at to 11 or 12 at midnight. And I start my whole day from there. So you can always reach out to me. And you know what? I do have a team. Like you mentioned, I have Shelly, and I have other team members as well. And you'll be working with me and my team as well. Sometimes you won't if you have any questions, any concerns with anything, please feel free to reach out to me. And my phone number is 678-650-1425, 678-650-1425, or you can visit my website at cindysrealtygroup.com, and it's Cindy with an S and then realtygroup.com. So, and I'll have my information in the back too. So if you have any questions, please feel free to reach out to us. And I wanted to do this video because you know what, there's a lot of things, there's a lot of things that we don't know, and sometimes we don't even think about mentioning it. So there's an alternative to get you into your dream home. So please feel free to reach out to us, and have a wonderful day.
See you guys.
Bye. Oh, wait.